Hello viewers, welcome to the episode on Front Office Accounting System. Front Office is responsible for handling transactions with the guests. As soon as the guest register himself or herself, an account is set up in which all the transactions made by that guest at different points of sale are recorded and consolidated at the time of checkout or settlement of accounts. In this episode, we will discuss on various aspects of front office accounting system. For better understanding, this episode is divided into 5 parts, namely overview of front office accounting system, concepts of front office accounting, creation and maintenance of guest accounts, tracking transactions and guest accounting. Let us have an overview of front office accounting system. There are several transactions exist between the hotel and the guest. The front office maintains certain accounting system in which the transactions with each guest are recorded. The front office accounting system shall be customized and tailored to track each hotel's needs. Therefore, no two hotels have exactly the same front office accounting systems. The objectives of front office accounting system are to handle the guest transactions in an easy way, to identify the revenues from different departments, to monitor credit limit of the guest, to avoid the fraudulent practices of staff, to maintain an accurate data of guests transactions, and to save the time and to avoid misplacements. Concepts of front office accounting. The various documents that are maintained in the front office to ensure a proper guest accounting system are accounts. An account is a form on which financial data are accumulated, summarized and brought to its ending balance. Moreover, all accounts shall have two entries referred to as debit or charges versus credit or payments. The most widely used representation of accounts is the T account, which summarizes debit entries on the left hand side and credit entries on the right hand side. Hotels operating under the manual system get use of journal forms to account for different front office accounting transactions. As far as front office accounting is concerned, there are two major types of accounts widely used, namely guest accounts. The guest accounts describe all charges and payments of guests who are already registered at the hotel, and non-guest, that is house or city accounts. The non-guest accounts describe all charges and payments of non-guests. Moreover, charges and payments of guests who check out with any method of payment other than cash shall be opened a non-guest account. Lastly, visitors and employees with charge privileges shall be opened non-guest accounts. Folios. A folio is a statement of all transactions, that is debits and credits, affecting the balance of a single account. At checkout, any guest folio should be balanced to zero through full cash payment, credit card transfer, personal check transfer, special program transfer and direct billing transfer, etc. The correct way of maintaining folios starts with proper posting, which is the process of recording transactions on a folio, that is proper folio, proper location and proper amount. Under the manual, semi-automated and fully automated systems, folios are called hand-written folios, machine-posted folios and computer-based electronic folios respectively. Moreover, all folios shall have a unique serial number for internal control and storing purposes. In the front office department, there are 4 common types of folios, namely guest folios. Guest folios are the accounts assigned to individual persons or guest rooms. Master folios. Master folios are the accounts assigned to more than one person or guest room, usually reserved for guest groups. Non-guest or semi-permanent folios. The accounts which are assigned to non-guest businesses or agencies with hotel charge purchase privileges. And employee folios. Employee folios are the accounts assigned to employees with charge purchase privileges. Vouchers. Vouchers are documents that have the details of the purchases made by the guest from an outlet of a hotel. This is sent to the front desk and they carry out the posting process in the guest's folio. Vouchers act as a supporting document of the transaction happened between the hotel and the guest. If the guest pays the amount in the outlet, then the voucher is filed there itself. Vouchers depict the details of the transaction information gathered at the source of transaction. Some of the commonly used vouchers in hospitality industry are credit card vouchers, charge vouchers, transfer vouchers, paid out vouchers, correction vouchers, allowance vouchers, etc. Point of sale, that is POS. A point of sale is the location at which goods or services are purchased, sometimes called as revenue center. Moreover, due to technology breakthrough, some non-traditional point of sales emerged, such as in-room movie and in-room vending service systems. Since charges are usually incurred at remote points of sales and guest and non-guest folios are maintained at the front office department, posting of different guest and non-guest charges shall be performed. An electronic transfer ensures this under the fully automated system. Under manual and semi-automated system, posting shall be done by a physical submission of different vouchers to the front office department. When posting charges, some items shall be considered. They are amount of the charge, name of the point of sales outlet, room number and name of the guest, brief description of the charge and guest signature and employee identification. Ledgers. A ledger is a book in which the accounts of both resident and non-resident guests are entered. This ledger aids in preparing the profit and loss account and balance sheet of a hotel. The main objectives of maintaining ledgers are: the front office ledger is the collection of front office account folios which usually include guest ledgers, that is, charges and payments of all guests staying at the hotel. At any moment in time, the account receivable includes the addition of guest ledger and non-guest ledger or city ledger, which refers to charges and payments of all non-guests. Guest account or guest ledger. A guest ledger is the accounts of registered guests. It has the accounts of all the in-house guests who are registered in the hotel. When guest arrive and gets registered and his room account is opened, all the guest purchases, room charges and taxes are recorded here. Example: room charges, food eaten in restaurant, had drinks in bar, laundry services, luxury tax, telephone charges, internet, etc. Creation and maintenance of guest accounts. All guest folios shall be created during the pre-arrival or arrival stage of the guest cycle. Moreover, folios might be either placed in front desk folio tray, that is, posting tray, folio well or bucket, or stored as an electronic guest folios in fully automated systems. As far as walk-ins are concerned, all their guest folios are created at the arrival stage. Record keeping systems. Non-automated. In a non-automated or manual system, Guest folios contain a series of columns for listing individual debit, that is charges, and credit, that is payment, entries accumulated during occupancy. At the end of the business day, each column is totaled and the ending balance is carried forward as the opening folio balance of the following day. Semi-automated. In the semi-automated system, guest transactions are printed sequentially on a machine-posted folio. The information recorded for each transaction included the date, department or reference number, amount of transaction and new balance of the account. The folio's outstanding balance is the amount the guest owes the hotel or the amount the hotel owes to the guest in the event of a credit balance at settlement. The column labeled previous balance pickup provides an audit trail within the posting machine's framework that helps prove the current outstanding balance is correct. If the semi-automated posting is done by mechanical equipment, it does not retain individual folio balances. This means that each account's previous balance must be re-entered each time an account posting is made to the folio. This process enables the machine to produce a new current total on the folio card, but it is very error prone and often leads to incorrect folio balances and subsequent night audit mistakes. Electronic posting equipment often does retain folio balances. Fully automated. Under the fully automated system, point of sale transactions may be automatically posted to an electronic folio when a printed copy of a folio is needed. Debits, that is charges, and credits, that is payments, may appear in a single column with payments distinguished by parenthesis or a minus sign. Printed folio copies may also be processed in the traditional multiple column account format. It is unnecessary to manually maintain an account's previous balance in a fully automated system since computer-based systems maintain current balances for all folios. Guest charge privileges. Potential guests who would like to have guest charge privileges shall present an imprint of an acceptable credit card or direct billing authorization at registration. Failing to do so, guests would have to pay in full all their charges through cash, hence called paid in advance, that is PIA. Guests and hence have no post status. Credit monitoring. In order to monitor and control charge privileges, the front office clerk should check whether the total net purchases are less than the minimum of floor limit, that is credit card company's limit, and house limit, that is hotel's limit. At least each day, lists of guests with high risk or high balance accounts shall be communicated to all points of sale outlets. This is vital since failing to do so will let point of sales outlets continue giving charge privileges to a point that eventually the credit card company refuses to pay the amount of money exceeding its limit. This will cause very serious financial losses to the hotel. Account maintenance. Whatsoever system hotels operate, maintenance of guest and non-guest accounts is ensured by the formula, that is net outstanding balance equals previous balance plus debits minus credits. Tracking transactions. Under the manual and semi-automated systems, tracking transactions is ensured through an intensive use of vouchers. On the other hand, under fully automated systems, tracking transactions is ensured through online electronic transfer of transactional information from remote points of sale to the front office mainframe terminal. In accounting, a transaction is an exchange of goods and services for cash or a promise to pay. Under this very assumption, nothing happens until a transaction occurs. This means the front office clerks shall first of all have a transaction, its supporting documents, that is vouchers, invoice, etc., to be able to later to debit or credit certain documents. In hotels, transactions might have in the form of cash payment, charge purchase, account correction, account allowance, transfer voucher and cash advance. Let us now discuss each and every one of them. Cash payment. In this very transaction, front office clerks shall post cash payment as a credit in the guest folio. Moreover, cash vouchers shall be used as a transaction supporting evidence. Charge purchase. Charge purchases represent deferred payment transactions that increase the outstanding balance of a folio account. In this transaction type, front office clerks shall use charge vouchers as a transaction supporting document. Account correction. Account correction is used to resolve a posting error in a folio detected at the day the error is made, that is, before the closing of the business day. In this transaction, front office clerks shall use correction vouchers as a transaction supporting document. Account allowance. Account allowances occur because of two reasons, either as compensation of poor service or as rebate for coupon discounts. That way, guest outstanding balance decreases and as to correct a posting error detected after the closing of the business day. For both reasons, front office clerks shall prepare an allowance voucher as a transaction supporting document. Transfer voucher. A transfer voucher is used when the account balance or account entry is transferred or shifted from one folio to another folio. Example, when one guest staying in room number 303 agrees to pay a dinner charge for his friend who is also a guest staying in room number 309 in the hotel, the charges must be transferred from room number 309 folio to room number 303 folio. Cash advance. It is also called as visitors paid out or VPO. It is cash paid out by the hotel on behalf of the guest. If petty payments like taxi fare, cinema tickets, postage, etc. are made by the front desk, a visitors paid out voucher is issued on the guest's name and his signature is collected and the amount is debited in guest folio. Internal control. In the hotel industry, the main purpose of internal control is to track transaction documentation, verify account entries and account balances and to identify vulnerabilities in the accounting system. The keyword to internal control is auditing, which is the process of verifying front office accounting records for accuracy and completeness. The scope of internal control extends to front office cash sheet. The front office cash sheet lists each cash receipt or disbursement in order to reconcile cash on hand at the end of a cashier's shift with the documented transaction that occurred during the same shift. Cash or petty cash. Petty cash is the amount of cash assigned to a cashier so that he or she can handle the various transactions that occur in a particular work shift. At the beginning of each shift, all cashiers must sign their cash banks and at the end of the shift shall deposit all cash, checks and other negotiable instruments in the general cashier's safe deposit box. At the end of each shift, cashiers should watch out for cash discrepancies, that is, any difference between front office cash sheet and the actual amounts in their cash drawers. Cash discrepancies might have the form of cash overages, shortages or due backs. Lastly, cashiers might come up with the net cash receipt, which is all cash checks in the cashier's drawer minus amount of the initial cash bank plus all paid outs. Audit control. Along with the fact that hotels might employ internal auditors at least once in a year, especially for hotels traded in the stock market, they should obtain a certificate of audit from an external certified public accountant responsible for approving hotels' accounts. Settlement of accounts. One of the responsibilities of front desk is to settle guests' accounts, which means the eventual collection of payments for outstanding account balances, that is, bringing account balances to zero. This is usually ensured either by full cash payment, transfer to an approved credit card, personal check, special program, or direct billing account. Guest accounting. Guest accounting means knowledge of what is to be received from the guest and what is to be paid to the guest. To have updated information of the guest account at any point of time, various accounting systems are used as per the requirement of the hotel. Objectives of the guest accounting process are to ensure that all financial transactions made by the guest are recorded and filed in the guest account, to collect payment for all the guest transactions. Types of transactions. Accounts receivable, food and beverage charges, room rate, laundry, etc. paid by the guest at the time of departure. Accounts payable, advances received, cash transactions. When guest pays in cash, there is no increase or decrease in the net outstanding balance. Handling foreign exchange. The hotel industry in any country is a prime source for the generation of foreign currency exchange. Foreign currency exchanges are done in hotels through a strict system of checks and records. In a hotel, the front office cashier is the authorized person on behalf of the management to receive foreign exchange. As most of the overseas visitors prefer to pay their hotel bills in foreign currency, the cashier must know the rates of exchange. The hotel can exchange the foreign currency but cannot sell it. If the guest has settled his account in foreign currency, the balance should be given in the local currency. The foreign currency exchange rates offered by the hotel might be slightly higher than the bank rates. This is done to cover up the administrative costs, market fluctuations in the exchange rates, and a small profit. To sum up, front office accounting is the most crucial system in which all the transactions between the guest and the hotel are recorded. There are various concepts of front office accounting, namely vouchers, folios, ledgers, point of sales, etc. Guest accounts are maintained on the basis of either non-automated, semi-automated or fully automated system. Guest accounting is the knowledge of the sum of the money due to and from a guest. Handling foreign exchange is another important task for the front office cashier. Thank you.